All right, welcome everyone. This is Jim with ARC AI and NeuroStreet Trading Academy, and this is the official AMA for the all-new Thrust Breakout Algo. Of course, before we get started, we need to post our disclaimer here. Please take a second to look over this. Can't guarantee results. Products and services are for educational purposes, right? You know the routine. All right, good deal. So a couple things. So let's go ahead and start out with the settings. I always kind of like to go through what all the different settings are doing and how it works. Okay, so let's go ahead and just throw this on. Start the algo up here. And then we'll take a look at the settings as we're looking at the actual algo. I find that to be probably the easiest thing. All right, good deal. So let's go find the trade. There's one. We'll kind of zoom in here. So we move this like that. Okay. So first off, we'll just go kind of top to bottom as to what the algo is doing. Let me grab my draw tool here and we'll go through this. So what we have is the thrust breakout is trading against supply and demand breakout zones. And so what we would need as a requirement is we need at least one rally candle. Okay, and the rally candle is going to be an extended range candle. And actually, I am going to refer to the manual on this because there's some good examples in there of what this all means. And I think that'll probably make more sense for us to review that. A couple images in there together, and then we can go through it. So where's manual is here. Manual, cool. All right, so let's go into this. I want to scroll. That's not letting me because I got my draw tool. There we go. So let's go down. Okay. Perfect. So this is a great example. So we've got extended range candle. We call it a rally candle. You can call it a drop candle if it's bearish. Okay, so rally or drop. The base candles are going to be narrow range candles. Basically what that means is they're small candles. Extended range, big range. Narrow range, small range. Pretty simple. We're trading the breakout of a rally into a base and then trading the breakout coming out of it. If we go in here, there's a couple things that we can look at here. There we go. So we have the idea that you can set how big you want the body to be in both candles, in the extended range and in the narrow range. So with the extended range, let's do, kind of highlight that one for a second here. If the total range of that bar is 10 ticks and the body range is 8 ticks, then that would mean that we have an 80% body to wick ratio on that candle. Okay. On the narrow range, what this is doing is we have a 6-tick range with a 2-tick body. So in this case, the body is 33%. Now here's kind of the, we always talk about true north with these things, right? The way that we have typically traded this, granted, you can eyeball it. That's how we've done it in the past, but now we have an algo to do it for us, which is great. But typically the way that we would look at this is the extended range candle would need to be 50% body or more. Okay. That's kind of your standard, 50% or more. On the narrow range, you would want this to be 50% or less. Okay. So extended range over 50, narrow range less than 50. You can optimize that. You can change it however you want, but those are kind of the standards. Okay. Then we have a setting where we can define how deep we can allow the base candles to pull into the extended range candles. The idea behind this is you're using up liquidity. Okay, so the deeper they go, they, meaning traders and the market, the deeper that the market goes into the rally candle, the less liquidity they have left to be able to rally the market again, because we're not trading this rally. It's already happened. We're not trading the base because what's the point? We're trading the breakout. So we want to know, is that market likely to continue to rally past the base candle? And that has to do with liquidity. So if this liquidity down here was strong enough to get the buyers moving the market through the supply, then that's a good thing. If they're having to pull all the way deep into here, then you've completely taken out the rally, and that liquidity is used up, is kind of the best way to look at it. Okay. So you can set how deep you want the algo to be able to, the market to be able to pull back into your rally or your drop candle. Okay. So in this case, if we have a 10 tick candle range and this base candle pulls 4 ticks into that candle, well, then you've used up 40%. Okay. So that would be fairly reasonable. You still have 60% of the liquidity left in that bar. So that's the idea here. So again, the standard number, you guessed it, 50% is kind of the standard. Again, you can optimize it however you see fit. You can use Fibonacci numbers as an example if you want to do it that way. That's great. Okay, so that's that setting. Entry offset. If we go over this one, this is going to tell the system at what point is it okay to take an order. So most of the time, if your base candle's here, and once this candle closes, the algo is now set, as in it's ready to trade because it found the pattern, rally, base, and now it's just a matter of, when to get in, where to get in. You can set it to 0 ticks, meaning as soon as the market touches the top, in this case long, the top of that wick, it's going to enter a trade. Or you can set it to 2 ticks, for example, and this would mean that it has to go 2 ticks beyond the high in order to engage the trade. So as soon as price hits that number, it enters a trade. Now, the beauty of trading with an algo versus doing this manually is it could be a beauty, could be drawn on, depends on the trade. But it's not setting this as a stop order. So the order does not exist on the trade until price hits this. As soon as price hits that price, it's going to enter at market order. So for those of you that understand order flow and the orders and the inventory and all that, that's how it's actually taking the order. Okay, so for some of you might want to know that. Stop placement. You've got a couple choices here. So your stop, the idea is go below the base candle. You've got a couple options there. You can set it to number of ticks below the wick. You can set it to a range and a percentage, which is very, very awesome, if I do say so myself. So if the range of this, let's just say that for a second, the range of that base candle is 10 ticks. If you had this set to a 50%, then what that means is it's going to take this range and it's going to add 50%, which would be 15 ticks total. So your stop is going to go 5 ticks below. Okay, so in this case, what does that actually mean in terms? Let's redo this because I want to do the ticks too. Hang on a second. Okay, sorry about that. Big sneeze. Okay, so if your stop offset is 50%, your range is 10 ticks, then that means this is 5 ticks. Okay. If your entry is 2 ticks above the high, and that's where you get entered, then your total stop is 17 ticks. The range plus the buffer plus the entry buffer. So that's going to put you at 17 ticks. To give you an example, but Again, for your stop range, you can use ticks, you can use the percentage and do it that way. You can also have it set based on whether you want your stop to go below the rally candle or below the base candle. I just give you the options here, people. What is the norm? The norm is below the base candle. Okay, so there again, there's your kind of true north. As far as a buffer, you're probably looking at either a Fibonacci number, 23, whatever, 38, whatever they are. I don't memorize those, or 50, or you could just do 25%, 20%, whatever you want to do. It's totally fine. I'm going to give you a hint here on the stops. If you're trading ES or CL or something that doesn't have a huge tick count, you're going to want to be a little bit more liberal with your buffers. So what do we mean by that? So let's say you want to shoot for a 50% buffer on the edge of the zone, on the base range, okay? It's a good number. It's the number I use on these trades. Let's say you want to use 50%, but when you start looking at like you have a 7-tick range, well, you can't do 3.5. So it starts to skew. It's not an exact number, right? Because you can't put your stop at a half a tick. So with NQ, something with a higher tick count, you're going to have a better time calculating 50%, 20%, 25%, that sort of thing, versus on ES or crude. It's going to be a little bit more difficult to dial those numbers in. You're going to need a lot of trades to do that. So as an alternative on ES and crude, some of the stuff that doesn't have as many ticks, you might want to do number of ticks versus a buffer. So just an added hint there, okay, when you're optimizing and all that. You could trade up to 3 targets. We know that. I'm going to go through the settings and the actual settings themselves. So I'm just kind of scrolling here to see if there's anything else. That was mainly what I wanted to cover. I'm going to leave this open in case we need to refer back to it. But those are the settings as far as what's going on in there and how that works. Okay, so extended range candle body. Let me go here and we'll just draw on it. Okay. 50% is kind of what I have this set to. Narrow range candle body, 50%. So meaning the extended range has to be at least 50% body. Narrow range has to be 50% or less. Make sense? Max allowed basing bars. This is an important one. These are your standard numbers. 50, 50, and 3 are your standards. Okay. You can optimize those for your markets. Decide what works best for you, for your market, your time frame, your chart. But those are the standards. So what does that basing candles mean? It means that how many of these candles are you allowed to see before you go, dude, it's not going anywhere. It's not breaking. I don't want to trade it anymore. If you got 10 basing bars, that's not an edge anymore. Okay, it's a totally different trade. It's different liquidity. What this is telling you is that there was an imbalance in price, and then there was a balance in price because it kept going sideways. There's buyers, there's sellers, everybody's doing business, everybody's happy. So the trades are, in theory, they're less likely to work the greater the number of basing candles you have. The best is assumed to be 1 basing candle. You're going to get a lot less trades. 3 is kind of the standard. I would say anywhere from 1 to 6 is going to be your range on that as far as optimizing. Okay. Extended range, narrow range, you can do you want to be really extreme and do like 20%? You want to be extreme here and do 80%? I wouldn't go any more extreme than that. But that could be your range if you really want to get wild with it. And if you're optimizing these, don't do that by 1. Do it by like 5 or 10, right? So you don't have as many iterations.
Hey, Jim, can I add something there?
Yes, of course.
On the 2 body percentage parameters, what I noticed was when you started getting away from 50%, the total number of trades would go down either up or down from 50. And it was not intuitive until I talked to the programmer and then we did the math. And without going into all the details, the bottom line is that you're going to get the most trades when both of those are set to 50. If you go above or below 50, you're going to start seeing less trades. So since that's probably less important than some of the other settings for optimization, I'd say a good place to start is to leave those both at 50 and then start playing with the pullback and some of the other settings.
Yeah,
That's the insight that we came up with,
that's awesome.
that we you know we realized once we started seeing the results. It's
Hmm.
just how the math works in terms of the because each it's not you're not looking at each bar in isolation. When you start changing the definition of a rally candle, then that changes whether it becomes part of the pattern or not, or whether the pattern resets the next candle. And so by doing that, that's why. So bottom line, all you have to really remember is it's probably best to start with both of those at 50. That's really all you need to remember.
Yeah, that's awesome. Good stuff. Yeah, and then basing bars, you are probably testing that range, what, 1 to 6, 1 to 5, something like that.
In terms of how many basing bars,
Yeah.
yeah, I think in my testing I was just doing 1 to 3. I wasn't really looking
Mhm.
at anything over 3.
Cool. Yeah.
But you can do whatever you want. But
Yeah, I think up to 4 can be good sometimes too, guys. I've tested that and it seems to be okay. Anything more than 4 and you're just it's not going to be as good. So, and you can isolate that, right? Like if you want to know, well, are the 4s and 5s, are they any good? Well, test it separately. Test it so that you're only allowed, well, you'd still have to go back and look at all of them. So never mind. You wouldn't be able to isolate that. But you can go in and look at the charts and see, okay, this one had 5 and it was a stop out, or just start at 5 and work your way down and see if the numbers improve. So I guess that's another way to go about it. Pullback threshold. This is again how deep into the rally candle is the market allowed to go. Again, the standard there is probably 50. We found in testing that doesn't have to be exact number of 50. It can be a little deeper than that. Again, you can get a little bit more defined with this on, say, an NQ or even an RTY or YM or something like that that has a higher tick count versus something like an ES or crude. That number is going to get to be like if you want to go with a 50, you might have to go above 50, in other words, to account for an extra tick or 2 here and there. Okay, does that make sense? So, um, so that's something to pay attention to and keep in mind. Entry offset. Um, if you get too low on this number, you get all of the trades and maybe a little early, and that's not always a good thing. So if you find yourself getting too many trades, it's getting in too early, that sort of thing, you can always bump this up to filter out some of the trades. But then, of course, that increases the size of your stop. So keep that in mind if you're using the algo for your stop placement. So extended range candle type size. This is something that I'm very, very happy that the team put into the algo. I was really hoping they would, and they did, and I'm very happy about this. So what this is saying is that your minimum size of the rally candle. Now you can set it to ticks, and you can say on ES, I want a minimum 10 tick rally candle. Well, what if the range of your market is 15 ticks because you're trading off the open, or you're trading in a very volatile day, or you're trading larger bars, that sort of thing. But maybe the market's just a little more active. And so having the ATR as a setting is a no-brainer because it takes all of the guesswork out. It's telling you that based on the average range of X number of bars is going to give you, if it's larger than that, then it'll allow that to be considered a rally candle. Personally, I'm going to tell you what I like for this, and you can do as you please, but I know ATR, the standard's 14, right? That's the standard setting for ATR. So it makes sense. Try it. The setting that I've always liked and used on this setup is 5. So the last 5 candles. That's just the way that I've done it, and it seems to work out well, but you can optimize those. So now you get to extended range minimum and maximum size. Now, I don't really know why you would necessarily want to use a max size unless you don't want your base candle to be too big. Because what can happen is you get this giant news candle off of some kind of fundamental CPI or FOMC or any other acronym you can think of. You get this huge candle, and then you get this large base candle, and you're thinking, okay, that's a good pattern. But when you look at these compared to all these tiny little candles, the base candle's really big, and you may not want to trade those in those situations. So that would be maybe a reason to use the max size. If you're concerned about news or markets that are too active, you can drop this number down, and that'll filter out some of those bigger trades. Okay. The minimum size is great. The standard on that one is probably going to be a 1, at least 1 times the ATR. But again, you can optimize that. This setting turned out at 0.5 and worked out fine. So, but that's the setting. So that's the main stuff as far as the algo, entries. Now, let's look at the stops. There's a few options you have there, as we talked about. So you've got enable algo stop loss. What does that mean? Yeah, that means it's going to use your chart for your stop placement. Okay, either the narrow range candle, the base, or the rally. So minimum allowable stop is going to filter so that you can only, you're never going to take less than, in this case, it was set to minimum of 40, but that's not how we're, is that how we're doing it? I don't know. It's fine. So this is going to be your minimum allowable stop loss. Max allowable, if you want to limit your size on, how big of a trade you're taking, you can do that. Stop loss offset. Again, you have ticks or percent of basing range. Okay. And then for this, you have based on where the stop is going to go. So let's go into these. So if we have this set to base range, which is the norm, what this is going to do is it's going to take the range of that base candle. Then it's going to put the stop below that. Okay. So our stop would go below. In this case, it's right here. But so you have 2 options in terms of this. Do you want to go with ticks or do you want to go with percent? If you do ticks, it's going to take the low of this and it's going to add however many ticks you tell it to. That's one way to do it. The other way is percent. If you tell it to add 20% of the base range, it's going to add 20% of the base range. Okay, so those are your options in terms of the base. What about extended range? Same thing. Well, this would be, I guess it would only apply for ticks if you're using the rally candle, which makes sense because you wouldn't do like, well, you could do percent of the base range though too, huh, Jeff? And this would just go, let's say if you use 20%, it's going to use 20% of this range then below.
Yeah, we just added both options, so you can do either one. Yep.
Yeah. Cool. So this will then do a percentage of the base range. If you're using this, you might want to go with at least a 50. Because, if you're assuming they're going to come out and sweep that low, then, gosh, makes for a big trade. But the standard is base candle plus percentage or ticks. That's the standard there. Okay. The percentage that I've always liked personally is 50%. It's a little bit big. Somewhere between 25 to 50 has always been my preference for these. Cool. I think we're good on stops. And then for target, you got a few options. Static ticks, ATR, which is going to base on whatever the ATR is at that time, or risk reward. Personally, I've always been a fan of risk reward, especially for prop trading, because you can lock it in to your risk, you always know what you're going to get out of a trade. Okay. Cool. Yeah, auto break even. There was a question on that, so let's do that. So I'm gonna disable a algo stop loss. Break even trigger. Now you have that, and this is going to be based on ticks. Okay. The reason that it's not in there on if you're using the algo is because it's not calculating based on ticks on the stop. So if you want to enable that, you're going to lose that option. But if you disable it, you can do an auto break even. Of course, if you're trading live and you're sitting there, you can always move your stop manually. It's pretty easy. Okay. Trade start stops, all that stuff is in here, all the engine stuff, the filters, all of that. We are going to go through this together on Monday. So if you have an algo, or if you don't have an algo, but you want to learn how the engine of the algo works and how to test it, we're going to go through a few examples. Probably worth checking out. Okay. So yeah, so we're good to go. So this was MNQ, so that makes sense why the minimum stop was 40. I thought I was looking at the ES chart for some reason. So cool. So that makes perfect sense. And then stop loss offset, you can go percent of base range. It looks like this one was probably set to 20. And yeah, it's good. Good stuff. Any questions on this so far? Does that all make sense? Good to go. Good. Trade room is closed Monday. Yes, the trade room is closed Monday, but we're doing a training event in the afternoon. Yeah. So I'm gonna just telling you now, I'm gonna sleep in. Can you show multi-targets with trailing? Yes. Yes, we can do that. If you thanks. If you do, yeah, so you can do multiple targets. If you're doing target type risk reward 1.3, let me see something here. Oh, they'd be up here. You have to specify what your risk is on the other trades that you're taking, the other positions. So if you're in a trade and you want to, trade 3 targets, you just put some risk on each one. If you want your total risk to be 500, well, then you might do 300, 100, 100, or however you want to break that up. And then now you have risk reward options for targets 2 and 3. Okay. And then it's all the same stop. So if you want to do a trail stop, then you got to disable that and go to ticks. Okay. And then you can get the options to trail. And let's say you want to, get there when you get to, and it's all set on ticks. So you want 20 ticks, whatever. That'll give you that option. Okay, cool. You won't get an email about the install. If you need help with the install, just send us a message and we'll get you squared away. Cool. This one was set on a 5-minute. That was 5-minute. So directional filters, you have first off in the algo itself, it's going to trade the trade based on the setup. So if you have a drop, assume for a second this is a drop base and you had the break, it would trade there. If you had, drop base here, it's going to take the trade based on the specifications. There's several options in terms of directional filters aside from that, aside from the actual. First off, you can go in here, you can tell it which direction you want it to go. Next, you have structure, which is these zigzags here. So if the market makes a lower low, that would say that structure is down, it'll take shorts. That's one option. Another option is you have either SMA or EMA filters. So let's say your EMAs are crossing under, that's going to enable shorts. And if it's crossing over, well, then that would be long. Okay. You can also do single EMA filters or single SMA filters, meaning that if the market is above the moving average, it'll trade long or short if it's below. You also have stepping moving averages. What the heck does that mean? Well, that means if it moves up 5 ticks on the moving average, it'll just step. For those that want to see horizontal, you can set it that way. And if it's below that or above, it'll trade those. Then you have momentum filters. You've got the fast, which is the histogram. If that's below, short. You've got these BBs, and that's your slow. If that's above or below. Then you also, I'm going to clear these out and make this bigger, maybe. Then you also have moving averages on the momentum, and you can set that for directional filters. Okay, so you can have it say that I don't want to wait for the histogram. I don't want to wait for the BBs to cross. I want to trade when these EMAs cross over, and you can do it that way. Or you can use any combination of them, and you can optimize for that. Okay, so a lot of options in terms of directional filtering. Start with the chart and then go look at the chart. See what works for you. Try different EMAs. You can optimize for that. Personally, I'm going to tell you my preference again. 9-20 EMA cross. The 9's above the 20, longs are engaged. If it's below, shorts are engaged. That's how I do it. That's how I trade it. So, and I do other stuff with it, but that's the main core of it. Cool. What else? Any other questions at the moment? And then we can go into some optimizing. You will get an email, should be today. If you don't get an email, send a message to support and we'll get it for you. It's going to be Monday. I believe it's at 2 o'clock Monday. It's the training. Cool. One chart crude, one chart ES, one chart gold. Yes. So there's a question on how can you trade multiple instruments? Well, you just pull them up on different charts. So like in this example, we've got one chart with ES. I'll move this over, one with NQ, one with CL, and then you would just, set those up on each chart and you can trade them all on one account. Yeah, totally fine. What if you want to trade multiple algos on one instrument? Can you do that? Yes. You have a couple options there. One, trade them on different accounts. You would have account one would be trading, the thrust, and another one would be trading the CWAP, and another one would trade whatever, springboard. So if you're running different algos, you can run them on different accounts if you're using the same instrument. Another option is you can trade one on the micro ES and one on the full size ES. It's another option. Different instrument. So that would work. Another option you have is you put them all on the same chart and you engage them manually. So this would mean you would have 3 different algos on this chart. None of them would be engaged to trade until you're ready for them to trade. So you would then use the drop down, you would set it to auto disarm mode. And I'll show you what that looks like because it's pretty slick. So let's go in here. Disable that. And let's go auto disarm. Okay, so let's enable that. Now, when we throw this back on the chart here, you'll see you have the option to arm or disarm. If you have it armed, it's going to take trades based on your direction. All the trades, regardless of time. It's very important to mention that. It will ignore the time. It'll still show you the time parameters, but it won't stop trading if it's set to armed. Currently disarmed means it's not going to trade, but it will still show you the signals. So if you have, I don't see any here, but let's just pretend here that there was a drop candle here. We got a base and that's our breakout. It's going to show you the signal. It's going to show you that there's a trade opportunity there. It's not going to trade the actual trade. So this is great for running. If you have multiple algos, you can just go, okay, I see good short opportunities on my breakout algo. So I'm going to arm it to go short and I'm going to hit arm. Now this one is set to trade and the others are, you would keep them off, obviously, make sure they're disarmed. Make sense? You can also, and this is a little bit more advanced here, let's say you want to trade breakouts to the shorts. So you enable your thrust breakout to go short. What if you want to trade long reversals? Then you can have your thrust breakout set to go short, but you can have a springboard set to go long. And you could have them both enabled. And it's, if you're in a trade, you got to disable one, obviously. Better to do one at a time, but technically you could set one long, one short, knock yourself out. Cool.
Hey, Jim, I'm not sure if you said this, but when you're in auto disarm mode and you arm it and then it takes a trade, it automatically disarms itself until you click arm
Yes.
again.
Yeah, thanks for
You already
sharing
said
that. I
that.
forgot to mention that. Yeah. So if you're in a trade, as soon as the trade's done, it's turning it off for you. That way it doesn't just keep trading. So pretty cool. It's something that they built out in one of our more frequent trading systems that trades a lot of orders. So which filter worked best for back testing? For me, it was the EMAs. It was the moving averages. Jeff can chime in on what worked well for him. Looks like he's saying moving average and the structure filter. Yeah.
I think it depends on the algo too. Some algos like momentum is really
Mhm.
good for some, but testing
Yeah.
is what's going to tell you the answer to that question.
Yeah. I think EMAs for this one was the best that I saw personally. So, but try different things and see what works. Split algos March and June. I wouldn't start using separate contracts. No, I wouldn't suggest doing that because some are going to be really light liquidity and you don't want to be trading contracts that aren't relevant. So stick with the current. Can you use it on, let's say, euro dollar, Aussie dollar? Can you use it on stocks? Friggin' lutely. Can use it on everything. And we can even, I haven't looked at it on Forex or stocks, so let's go check it out. And we can see what it looks like. I've never run it and I'm curious and I want to see it, and I'm sure there's somebody else here who wants to see it too. So rock and roll, we're gonna do it. Let's start with euro dollar. I'm just gonna load like 10 days and I'm just gonna set it for today, back to current. Good stuff. Cool. Let's take a look now. It's a little interesting because tick counts are totally different on Forex in Ninja. It's kind of quirky actually, but that's fine. Entry offset. I wonder how that's going to go. Let's take a look. ERC. Let's go one. Min max. ATR period is 5. That's cool. Long and short. 500. Back test. Enable. Minimum. I don't know. Percent. 50. Cool. Add this in here. Double EMA. 9 and 20. All right. Well, let's see what happens. We have templates on NQ, ES, and that's it so far. We're going to look at crude and MES together here today. So we'll check those out. Cool. I'm not worried about profit and loss just yet. I just want to see what the trades look like. Looks pretty decent. That one looks pretty decent. Let's go to this one. This one didn't work. It's also inside. You see how it's inside that wick? That means it's trying to trade back into this noisy wick off of a news release. We had unemployment come through this morning, so that's why that one fizzled. And this is where some trader involvement can serve you well, right? Like you can look at what is relevant. Do you want to trade into the London Open? Well, knock yourself out. Do you want to trade before that? Probably not. Why would you expect the market to break out prior to the London Open trading back into a high, right? So some trader involvement can be good, but so far those trades look good, other than you'd have to just filter out time. This one, it looks like, and this is just kind of showing you the breakdown of how the thing trades and what to look for. This is saying that it was a rally into a base and then trading long here. Well, this rally candle isn't very big. It's not even bigger than the previous candle. Not to mention it's an inside bar. So we've got an algo coming for that, by the way. That one's next. That's going to be another good one, guys. Stuff that we're actively trading that we're putting into algos. So good deal. This one looks like a great trade. Just didn't work. So was your stop too tight? Maybe. I don't know. You can look at these and just see, how does it work for your market? Let's go to somebody give me a stock, any stock. I don't care. Just give me any stock that you like trading. I'm going to go to a 5-minute. Tesla. All right, we got 2 for Tesla. Might as well. NVIDIA. Yeah, I've got all the major ones. We'll go check them out. There we go. So this was the 5-minute. Let's go to Tesla. And let's see what it looks like. The thing that I love about this too is that once you have your standard defaults are very they're transferable among many different markets or asset classes and that sort of thing. So it's really great. You can have your standard settings, which I have a kind of a default that I've been using. So I'll give it a second to calculate here. I don't, must be a lot of data or something. Might have had too many days, maybe. I don't know. We must be patient and wait for the algo. Probably more specifically, Ninja. Okay. I mean, just looking at today, and there was some red, right? We're not trading at 2 o'clock in the afternoon. We're trading them the day, so I don't have time filters set on it, but let's take a look at it. So was that a rally candle? Still took profit. Let's zoom in here so we can see what's going on. There we go. That's easier to see. So was it a rally base? Rally base right here? Yeah, I think so. Took the trade there. Good stop placement. Looks good. Okay. We've got rally base, breakout there. Took another trade. Rally, base, 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 base. No trade. Love it. Now, these are settings for like futures. I just threw it on a stock market, didn't optimize anything. That's why I love this. Rally, huge rally this morning off the open on Tesla. What's going on in Tesla? Anybody know? I don't know the fundamentals of, I don't trade stocks, just trade the equities. But apparently something happened this morning off the open that caused this market to rally. There's your, and you would want to go stocks long only, right? Make your life simple. So there's the trade. There's the target. There's another rally base here. So how come it didn't take a trade here? Well, because it didn't break out. That's your answer, right? So that's why it didn't break, which is, again, great because you only want to trade stocks that are moving, that are breaking. So no trade there. Rally base, breakout there, another win. Rally base, breakout there, another win. I don't know. There's something to this.
You just optimize stocks.
Yeah, absolutely. Trade the snot out of stocks. We have made a lot of money trading this on
That's
stocks.
where this whole strategy came from.
Yeah, exactly. Let's go to Amazon. We'll take a look at what Amazon did today. Elon is holding more stock than originally believed on exercised options. That's why it rallied. Okay. How many shares did it put on? I'm sorry, I already got off the page. I don't know. Whatever it would be to be 500 risk. So depending on the size of the position and in terms of like the where the stop's going compared to the price. So let's take a look. Okay, so you had a rally base break. Didn't work on Amazon. Obviously, nothing works 100% of the time. Let's go back a day. Hmm. Hmm. Few more winning trades. Looks good. Let's go back another day. That's all we got. Looks good. Want to look at TQs? It's going to be pretty similar to NASDAQ, right? A lot of our traders are trading this on the futures markets, but you can check it out. If you want to trade round lots, then you turn off the you would set it to the risk.
Static.
Yeah, you'd go to static on that and just set however many, shares you want to trade or lots or contracts, whatever. This one's still active based on that. It's 1 o'clock in the afternoon. Nobody's trading it anymore. Let's go back. Stop out there. Yeah. I'm pretty close to that target. I'm pretty close though. So part of the question isn't measuring in shares or lots. Shares. Yeah. I think Ninja measures in shares. And somebody can correct me if I'm wrong. I don't normally trade stocks. This one, looking at this, here's what by looking at the chart, you're gonna get some insights. In this case, look at how high above the base this is entering. So, the 10 is what I had the buffer set to. It's not going to work on this market. You're going to have to tighten that up. It's a little too big. So that made the targets too big on some of those other ones. So looking at the chart will help you for sure. I haven't looked at bonds. Let's go check. I can go see what happens. You can trail the stop with ideally with multiple targets, and then you can trail the stop. Bonds has no tick movement, so no, you're not going to get anything out of bonds unless you're using really big, like really big time frames, because there's not enough tick movement to get the rally base percentages to line up. So you want to look at Bitcoin. Wonder. I'm just going to look at the Bitcoin futures. Bitcoin's going to be about the same. There's not a lot of tick movement. Yeah, there's nothing here. Let's see if I don't know if I have this. I'll try. Yeah, I don't have data for that. I'm very curious about yen actually, because yen, they do that nonsense where they just like make it run. Let's go dollar yen. But yeah, you guys can go through and take a look at the different markets that you like. You guys all own it, so take your time to go through it and stuff. This I think disabled. Let me re-enable it. That can happen when you change markets. It can disable the algo. Just re-enable it. Gold is actually pretty good with this strategy. I've traded this on gold and it's actually pretty good. So I think you'll probably get some good numbers. I wouldn't go any smaller than a 3-minute. I'd stick with a 5-minute on gold though. That's just my thought. Yen futures is going to be another one. It's not a high tick count. You're going to have to use a bigger time frame chart, and you're not going to get very many day trades because the tick count is so low that you won't be able to hit the thresholds to be able to actually take those trades. So this one looked pretty good. Just didn't work. That one's too tight. Yeah. I don't know. You'd have to go through and optimize for Forex, guys. That one looks good, but look at the size of that rally candle. Man, that's massive. And in that case, you'd probably something like that, you'd probably want to just set it and be like, you just do it, turn it on manually. Be like, oh, I like that. I definitely want to get in on that action if it's going to break, that kind of thing. So cool. So we've gone through some different markets. You guys can go through your market of choice and check it out. It's going to work really well on stocks and ETFs and that sort of thing. Works great. Did anybody trade any stocks that were breaking out today? We can look at maybe a stock that was breaking just for fun. I'm curious. Obviously, Tesla looked good. I don't think we looked at Nvidia. Let's try that one real quick and then move on. Let me see if I still have my scanners. Here we go. I do. Um, BHR, DRIO. We'll check those ones out. I don't know. I geek out on this stuff. I guess we're going off on a tangent a little bit here. We can spend some time on optimization, but it's fun to see when things are working. You're like, all right, this is pretty slick. So how do you avoid overfitting, make it consistent over time? That's a really great question that I want to touch on. It's a good thing for us to discuss. So here's my take on curve fitting or overfitting, right? What you want to have is you want to have your standard default settings, okay? Something that you have tested on very many months or very many weeks or whatever the case based on the time frame you trade. But it's a lot of data has shown that if you trade it this way over the long run, you will have a significant edge. Those become your standard settings. Then what you want to do is you want to have a variance from those settings. So let's say on the ERC and NRC numbers, let's say 50 is your standard number. Well, maybe your range is 40 to 60, and that's where you stay in between. Think of it like guardrails. They're keeping you from getting way out in the weeds to where you're like, well, I've got 10% on this one and 2% on this one, and I've got a momentum filter, and I've got this thing and that thing and this thing and all this stuff going on. And by the time you start doing all that stuff, you don't even recognize what the hell the algo's doing in the first place because you've changed everything, and now it doesn't even remotely resemble your standard settings. So by having your true north is what I would call it. It's like your compass, this is where you're going to kind of live. You're going to have a little bit of a variance on each side as you optimize, stay within that lane. And if the algo has a bad day or the markets don't line up, sometimes it's going to happen. Welcome to trading. So don't try to do too much. You can optimize it as much as you see fit, but you just don't want to stray too much from those standard settings. If you start seeing that it's getting way too out of line, then where it's not working well, then you go back to the standard and maybe re-optimize. Cool. There's not necessarily a provision to change to default, but I always keep a default setting in the templates for the algo. So yeah, so here was a winning trade. There was another one is really small. I don't even know how I took that. That was today. This one caught one there, which is really great. Your buffer is going to be based on stock price when you're trading stocks. We had it set to a buffer of 10. Well, when your price is $742 a share, 10 cents is nothing. So just keep that in mind based on your market or what you want your buffer to be. We can look at, more like a small cap. Let's check out one more. I just want to see this one, DRIO. If I have it, I don't have it. Let's try BHR. Don't have it. Do I have anything? MPU? Nope. I'm just looking at some of the big gainers for the day. Let's go APLT. No. What am I missing here? I know we got big lots. Let's go check that one. There you go. I don't know about you guys, but I'm about to just go trade some stocks with this thing. This is this is insane. This is ridiculous. I love it. All right. Cool. Trade it on stocks. Make a whole bunch of money. All right, so let's go. Let's go do some optimizing, yeah? So I'm going to start a new one here in case we want to refer back to these. We don't have to close them. Let's go to starting backtest. How are we doing on time? You guys good on time? I know we've already spent an hour. We usually book these for an hour and a half. Do you guys want to take a quick 5 and then, well, quick 3-minute, refill the coffee, the water, whatever, and then we'll come back and do some optimizing, okay? So let's do that real quick. Jeff is more than welcome to tell jokes, you know, tell stories. You could have story time.
Actually, I'm going to take a quick break too.
Yeah, good. Cool. So let me load this one. We'll start with ES since a lot of traders are probably trading that. And I'm going to run this and I will be right back. Okay, we are back in action. Here we go. So I've got this set for MES, 3-minute. You guys know I'm kind of a fan of trading a basket of different markets. I ran some tests on ES and crude and NQ and put them together on a 3-minute chart, and voila, looks great. So let's go through the settings and just see if we need to optimize it anymore. So we're going to go to optimization and we'll just start optimizing some things. The way that we do optimization, we'll take some notes here. You guys can follow along. I always start with the algo optimize, the algo settings itself first. Okay, so what I'm going to do here is I'm going to go down and I'm going to turn off all the filters. So I don't want any of these to be required. Looks like we're good there. False. Cool. Okay, zigzags. I'm going to turn it off. I'm going to make it false for now because these are filters. They're designed to filter out trades. Lunch disabled. Cool. Trade start time. We're going to leave it 8 to, I'm going to do 8 to 3. Actually, I'm going to do 8 to 2. And then we can, again, we can filter that down if we want. Risk reward, I'm going to keep it set to 1-to-1. Stop loss is going to be set to basing range, minimum allowable 8. Stop loss offset. For ES, I'm going to keep it to ticks. The reason is, as we talked about, lower tick count, you start doing percentages and you get kind of skewed on the numbers. We'll just leave it as 3 for now, but we'll optimize that. Okay. Good. I'm just going to keep it set to 500 risk. So now we get to the actual strategy parameters here. So we'll start with these. I'm going to kind of set everything to the true north, and then we'll go through some of these. Okay. ATR. Minimum, maximum, I don't care. So this is the stuff I'm going to optimize. Okay. Yeah, what I was doing there, Donald, is I'm just turning everything off. Okay, so we're starting here. Okay. So first thing I'm going to do is I'm just going to pick out a handful of things. I'm not going to get too crazy here. I'm going to go 40 to 60. I'm going to go by 5s. When you set this is telling it to how many tests to run. If you have it set to 1, it's going to run 40, 41, 42, 43, 44, 45, 46, 47. I'm being obnoxious on purpose because you're going to get a whole whack load of back tests and it's going to take forever. So don't do that. So we'll set this 40 to 60 by 5. Pullback threshold, I want to mess with this one. And we're going to go 50 is the minimum number there. In other words, if it's pull, I don't want to be too restrictive to where I'm saying like it can only pull back 40% into the bar, like nonsense. Okay. So I'll go by that, and I'm going to go by fives on this as well. So now I've got 40, 45, and 60. So 5, 25, and then this will get me 1, 2, 3, 4. That'll give me 125. So let's run it this way first. I'm going to set these to 1. Okay. What I like to do when I'm running optimizations, I like to run, what are my optimizations I'm actually running? So I'm going to take a note. ERC was 40 to 60, and it was by fives. NRC, 40 to 60 by fives. What else did I run? I ran the pullback threshold. I'm just going to abbreviate it. 50 to 70 by 5. That's it for the first test. And that got me, and we can even take note, 125 iterations. Cool. Hint, you can use this again when you're optimizing it again. This is saying it's going to take 5 minutes, which is kind of a long time. But I guess it's because it's MES. There is a lot of data. All right, we'll let this do its thing. Anybody have any questions that we can answer while we're waiting for the test to come back? Yeah. Yeah, depending on the time frame that you're running. So if you're running smaller time frames, going back to November is pointless because it was totally different markets. Might not seem like it, but if you're using a small time frame, you got to go with what's current. If you are trading a higher time frame, say a 3-minute, 5-minute, then those could be relevant, and you can you can get some better numbers on those. Is it testing over 30 days? It's testing from, right about 30 days. Yeah, right about that. You could shorten up the trading days. Yeah, that'll make it quicker. Let's run this test and see. We'll check the times and see what's working and what isn't, and then we can always maneuver. Couple more minutes. What else? What other questions? On algos, yeah, there's some bit of optimization involved on a regular basis. It's part of the process for sure. Two more minutes. I feel like it's going a little faster than it said it was. Now this is a 3-minute chart, so it's not too big, not too small, somewhere in the middle. So testing a month is probably a good time frame to optimize. It has been for me on this MCL template. It's been great. Yeah. Asking about the CWAP algo. I don't mess with optimizing dollar amounts or contracts because the way that I'm running these and most of the traders are is based on trading prop firms. And so usually most traders kind of have that risk dialed in as far as how much they want to risk per trade. And that seems to be the way to go for trading trading prop firm accounts. So definitely not worth optimizing that. So first we kind of have algo settings, right? Then we kind of have trade sizing, things like what is your stop loss going to be? What's your take profit going to be? How are you going to set? those, right? So that would be kind of after you set the algo settings, that's what you look at next. Okay, cool. So we got pretty decent numbers, 2 out of 3. I did forget to set it to max net profit, so let me do that. Cool. So I'm going to go here. Let's do that. So 49. This one turned out to be the best at 60 and 60 and 50 pullback. So pretty close to our standards, right? That's not too far off. 60, 55, and 50. 60, 60, 70. Not too much different. So the next thing I like to look at is not getting too dialed into, well, this was the best one. Well, how do we know? Well, you got to look at how many trades are there and what's the difference between this and this. 55 versus 60 was the only difference. It was about the same. You got more trades, still profitable, but you gave maybe had an extra stop out. Well, what's one stop out? That doesn't really tell you anything, right? So if there's one extra stop, like then the point is just don't get too caught up in the numbers. If that's the case, there's not much of a difference in terms of the result. Then we're going to keep it at 60 and 60. So the body could be up to 60 here, but it had to be at least 60 here. I'm going to go with 55 because I want this to be a little less restrictive, and I can use some of the other things to continue to optimize here. So I'm going to keep this set to 55, and that'll be what I go with. For max allowed basing, I'm going to go 1 to 5. And then pull back, we're going to leave at 50. We didn't really see any improvements by increasing that number. Entry offset, let's go 3 to 6. I don't really want to go too much further than that. ATR, I'm gonna try it at 5 just to see what it looks like. Minimum ATR size. Let's go 0.5 to 1, and we'll go by 0.1. Okay, so this is gonna give me 6 plus 4, so that would be 24. And another 4, so we should get about another 100 iterations. Before we do that, let's go to our time frames and see what was working for us there. Let's go entry time. Yeah, so pre-market, not so hot. So we had nothing from 8 to 8:30, and these were a wash. So does it make sense to trade from 8 to 9:30? Nope. I would still keep this in because odds are we can filter that to get the numbers to come up. But I'm going to go ahead and change the start time now to 9:30. And we'll go with that. Cool. Let's go ahead and run it. So our notes on this one, we have, what do we have? Max basings. And that number is 1 to 5. We're going by ones. Entry offset. We're going 3 to 6 by 1. And this is, we're going to put MES on here too, so we know. And then we did ERC ATR, and it was ERC. I'll just go ERC minimum. And this was 0.5 to 1. 1. And we're going by 0.1. And yes, this is a 3-minute. make note of that. Okay. This is giving me another 120 iterations. Now, once you find out your market, you may not need to be as extreme on these numbers. The pullback might be 50 to 65, right? The max basing might be 1 to 4. The entry offset might be 2 to 4, or 3 to 5. You can tighten up these numbers as you see what works over multiple optimizations. Yeah, we'll definitely, when we save them, we'll definitely put all the details in the settings and hand them out to everybody. So let's start looking at what would we want to optimize next, and we'll just start kind of putting some things together on that. So let's go ahead and scroll down if it'll let me. Okay, so I want to optimize the stop, and I want to optimize based on tick offset. And then I want to optimize risk reward for the targets. And then once we're done with that, then we go to filters. Yep. Couple more minutes there. Good question, Robert. So it depends on the market you're trading. So yes, does it make sense to separate optimizations for separate time frames? Yes, absolutely. Depending on the algo, depending on the market. My take is 8 o'clock to 9:30. You guys have probably seen me go over this before. 8 to 9:30 is going to be like one type of market for, we're just assuming ES here for a second. 9:30 to 10, different type of market. 10 to noon, different type of market. Noon to 2:30, different type of market, right? So you may find that it makes sense to optimize every one of these separately and run 4 different settings throughout the day. I mean, it all comes back to we're here to make money. Like that's what we're after. So why not make as much money as possible, put ourselves in the best position to do so, and just accept the fact that it might require a little bit more work, but if it pays off, why not? Right? You can look at higher time frame moving averages too. Yeah, Benjamin. So if you want to go by, let's say you want to go by a daily moving average, you can do that. If you want to go by the 30-minute 9 and 20 EMAs, you can do that. So you can absolutely optimize for that. Yeah. So now looking at the times, we were able to flip 10:30 to kind of a break even, and then 12:30 in this case kind of pushed out the profit from that 1:30 time frame. So let's go in and see what we came up with on this test. And we want to look here. So these two are the same result. This one had a lower drawdown, which I like. Higher profit factor, a little less trades, but those less trades equated to less drawdown, which is a good thing. So we'll take a look at that one too. So the max allowed was 5, pretty aggressive number. Let's see what the max allowed was on this one. Max allowed was, where is it? Where is it? Where is it?
It's the third one.
Oh, no wonder I don't see it. I'm looking further down. So it was the same at 5. Let's just check out a couple of them. 4, 4. So the 4 gave us a little less trade, one less trade. And it was a winning trade. So that didn't really do us any good in this test. So this would be 5, would be this number. We'll keep that at 5. Entry offset 6, which is interesting. What did this one entry offset? There it is, 6, 6, 6. Interesting. Huh, that's pretty big. It's a pretty big offset for ES. I don't know if I really like that, actually. I'm going to leave that and maybe test it again against something else. ERC minimum size 0.8. 0.8 was there. 0.7 was about the same. So, and then this one is 1. 0.8, 0.7, 0.9. Not seeing much of a difference on that one. I'm going to leave it set to not be too restrictive, but I don't want to open it up too much to be at 0.7. So what we're going to do here is we're going to go 0.7 to 0.8. And we'll just go by 0.05s. Let's do that. And now let's go mess with the stops and targets. Enable stops, yes. Ticks, cool. 3. I'm just going to do 3 to 6. Let's try that. And then I'm going to leave the risk reward and test that last. So let's run it this way. Can you load the algo more than once on the same chart and have different templates? I believe so. Jeff can correct me if I'm wrong. I believe so. As
I
long
wouldn't
as
I wouldn't recommend it, but
might
you
crash or
could.
something.
Well, I mean, if you're actively trading both, then they're gonna be competing against each other.
Well,
You
no, it
know,
would be like
but you
one is set to go till like 10 o'clock and then a different one would take over, that kind of thing.
yeah, you can do that. I
Yeah, try
some
it.
yeah,
Try it in sim.
try it. Try it and yeah, don't trade real money yet.
No, always try it in sim. It's always the answer. Algo pretty much makes sense on time bars. You can do volume bars. You can do tick bars or minute bars. You cannot do range or Rankos or any of that. I don't know enough about Heikenashis and all the other stuff. I've never traded that before in my life. So I don't know on those, but cool. Waiting it out. Another thing that I like to do when I'm optimizing is I'll end up keeping, what was the number that came back as the optimization. And then I'll save those tests every time I run it so that I know, well, last time it came in at this and last time it came in at that. And you can start to kind of compile that data and figure out what's working. Think of yourself as an algo trader. You've just become a statistician, basically, is what you've done. Like, you're no longer a trader. You're a mathematician, statistician, data analyst, whatever you want to call it. That's your new job as an algo trader. So get used to keeping records, and it's only going to help you. Again, it all comes back to making more money. So if it helps you, cool. Yeah, I mean, what I would do is just keep a a document, like a Word document or even like an Excel spreadsheet or something, and just take down the settings every time. So no improvements by changing anything on this one. What happens is when you start running 2 and 3 layers deep into the optimization, you start seeing that you're not getting any change on some of the stuff. So it's up to you if you want to run a massive back test and let it run for several hours while you go do something else. I've never been one to do it that way, but this came back right there, and it looks like these are kind of no change from one to the next. 7.5, 0.7, 0.8. They're all the same. So I'm going to set it to 0.8. Actually, let's just go 7.5. 0.8 is kind of a random number, I guess. So cool. So we got those locked in. Stop loss offset, still the best at 3. So we'll keep it locked in there. And then let's test risk reward. And then what I'm also going to do now is shave off the afternoon, and we'll just go to 12:30. You would see the dotted lines on your chart, Greg. You'd see the green and red dotted lines. That'll tell you when things are active or disabled. Okay, so let's optimize this. We'll go 0.5 to 2 by 0.1. This one should go a lot quicker once it gets going. Cool. So we got some different numbers coming in here. 1.9. And where are we at? 1.6, 1.8, 1.7, 0.5, and then 2. So the higher our multiples are paying out more. This one had a better profit factor, though. So let me go this way, too. What was this one? This was our 1-to-1. Oh. Yeah, so hanging on longer made more money on these. Because the 1-to-1 is down here. Yeah. Okay. So now, should we hold on for, where was it? 1.9, 1.6, 1.8, 1.7, 1.5. It really comes down to preference at this point. These are all very profitable and they all look great. It's good. This is the lowest drawdown, was this one here. But I want to look at it in terms of a ratio of drawdown versus profit. So if we go to, I want to check out the 1.5. Where was that one? This one. 79.92. It's 21%. So let's see what this one was. 14%. So this one, in terms of trading based on drawdown, is going to be better. You're leaving 2,500 bucks on the table by doing that. Personally, I'm more of a fan of this one, honestly. Although we could shorten the hours from 10 forward, and that would probably change the max drawdown. So, this comes down to preference at this point. I'm going to run this again starting at 10 o'clock and just see what it looks like. But this time, I'm going to take away the 0.5 and just go to 1-to-1 from 1 to 2. Let's run it this way. See where that comes in. Now we're kind of getting into the fine tuning of it, Yeah, if you need to switch to a different machine, you just run the license activator on the new machine, and it'll license it for you on that machine as well. If you already have 2 licenses activated, then we need to switch one for you. So just reach out to support. We can help you do that. Okay, got a little bit of a better number. Yeah, that was because we shaved off the time. So this is probably our 1.9. Yeah. And now the drawdown didn't change though. So that didn't really help us. So we're going to go back to the 1-to-1. And we're going to go back to 930. And you think, well, why on earth would you pick a template that's not as good? Because it comes down to what you want to do with it. If you're using it to pass your evals and get funded, that would be what I would do. Bear in mind, we've still got other settings that we can go in and test for. So we're going to go to moving average and structure. And I want to just test these 2 and see what happens with it. Okay. So I'm going to go true or false on both of them. This is going to be set to double. Double EMAs, primary bars. Cool. I'm going to go change these settings to 9. 9. Okay. And then true and false. Cool. Structure, true and false. And then I'm just going to go 2 to 5. Yep. Hopefully I don't get 10 million iterations. Let's see. I can deal with 16. It's good. Yep, we are. We are going to do that in the gap program. Yep. Almost there. There it goes. These are all the same. 69, 22. All right, so let's see what these are. I'm going to assume they're all false because I think that was our original number. Yeah, so these are all going to be false. So in this case, it didn't help us to have any filters. So that's fine. So we can turn that off. And you can turn, oh, it's cool. MA single, or not single, double. And we want false. Okay. All right. Now I'm going to go to backtest. Make sure all the numbers line up to what we were looking at. They are not lining up. So what I need to do, I'm going to go back here. I need to save this. False. 930, yep, 1-to-1, 3 offset. Just making sure all these settings are right. Okay, I think we're good. So I'm gonna go to save, and then we're gonna go to MES, and I'll just put 215. Save. Back test. 5065. Yes, 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 yes. Good, good. Yeah. Basing range ticks. Cool. 930 to noon 30. Show, but don't require. I'll change this back to 2. Run it. What are we doing in Gap? So we're going to go over privately for some of our Gap members. We're going to look at trading discretionally with algos. So we're going to look at that in our program. All right, so let's go to daily. One losing day, the rest were winners. It's a good thing. Trade by trade. Looks good. It's like 2 losses in a row was the most. Summary. Okay, and this was actually set through 213, but yeah, looks good. Looks good, looks good. So let's just see now. Did it take any trades in the last few days? I don't know. Yep. Took 9 trades. It's a good number of trades, actually. 3 wins, 6 losses. So maybe needs to be optimized some more. This is part of the process. You get something and you check it forward, and 2 days, 3 days is not anything worth changing necessarily, but maybe good to look at some of the settings that are a little bit of an outlier, like the entry offset. Maybe this comes back down to a 3. You can start to test some of these things that are kind of the abnormal settings. Go back to your true north and see if that makes a difference in what you're coming up with, right? So, yeah. A little better bringing that down, but it gave more trades. So anyway, that is the process of optimizing. Kind of gives you some ideas on how to optimize it. My encouragement would be to take this and run with it, and test it against different scenarios and try different things, and try it out. What I always liked to do was optimize something, run it forward for a week, and then re-optimize, and then start really looking at where those numbers are falling into place. Usually the first optimization is not going to be something that you're going to stick with. It's going to be something that's going to need to be changed. So, right. But good stuff. What questions do you guys have? Anything else I can answer for you? You guys got a good idea on how to do this stuff? Does need anything else? Big difference is forward versus back testing. Yeah, so here's my thoughts. When it comes to optimizations, you've got, let's kind of dive into this a little bit because I want to kind of go over some theory here because this is important. Okay, what color do I have here? Let me change colors. Hang on. There we go. So here's how I've always done it is so today is 2/15. Yeah. All right. So you look at the calendar, pull up the calendar and see. I'll just go into here. So the Friday was the 9th. So what I would do is test the 16th through February 9th. So January 16 through February 9. Optimize based on that. Then run a back test for this week, 2/12 through 2/15. If that back test came back profitable, then you've got some good settings to start with. If it's not, then you go back here and optimize some more and try to figure out what's the difference from here to here and why, what were some of the things that you're seeing. You just go look at the chart and just see what you're looking at. Then at that point, once you've got something that works against all of it, then you have sort of your standard parameters and you have your variance on each side, right? Once you have that, then okay, now I'm going to optimize, 4 weeks of data based on this week, and that's going to be what I run for next week. I know this is kind of getting into the weeds a little bit here. So the idea is run 4 weeks, then run it forward for 1 week. If it's good, then you're going to re-optimize for the 4 current weeks. And then that's what you're going to run forward. Okay. Sounds silly, but it's always worked for me. Okay. That's what I would suggest. Just my thoughts. We might all have a different process on that too. There's no right or wrong answer to this stuff. You just kind of do what works for you. So cool. Is TickBlaze going to take care of quant mode? God, I hope so. It would be nice to have it be able to automatically optimize. I don't know. That would be really cool. Hey, I after what I've seen them do with everything we have so far, who knows? Maybe that'll work. Yeah, good. Glad that was helpful, and I don't want to go too much longer and keep digging into the back test. You get the idea. You guys can take over from here. Okay. But cool. I think we're good to go. You guys have a fantastic weekend. Enjoy it. We'll be back Monday to go through more details on this type of process. We're going to cover more insight on that, so be sure to join us for that. Yeah. We're going to be looking at on Monday, the ones that we're going to be kind of testing is going to be CWAP, Springboard, and HFT, I believe. And then as far as the deals, it's going to be on, we're going to run a sale and a coupon code for algos, kind of a last chance pricing kind of thing. And then that'll be all the algos except for the new one, right? So right, exactly, Phil. I know. I was just thinking about that. I was like, I wonder if I'm ever going to get that call. That's funny. Good stuff. All right, guys. Well, much appreciated. Thanks so much, guys, for hanging out, being a part of the community, trading with us, buying the stuff that these guys are throwing out there. Really glad to have you with us. If we can help you with anything else, send a message to support, and we got you covered. These settings, I think, really, I would just say jot down some of the numbers. They weren't really that great on this back test and the optimization, so probably need some more optimizing yet, but we had 55, 65. Here, let me do a screenshot at least. I don't want to post something that still needs to be optimized. You know what I mean? Because then it just looks goofy. Like, why are you giving me this if it's not even that great? Just seems silly. But here, you can take a screenshot if you like of those settings, and then you can kind of run with them and change some things up. Very cool. All right, guys, enjoy it. We'll catch you later. Let me know if you have any questions. We'll see you on Monday. Take care.